If your trades are looking like this and you want them to look like this with insane risk to reward ratio, well, you found the right video, because today the goal of this lecture is going to be for you to learn how to predict the market direction, then to understand the whole logic behind the trade, and then to be able to catch insane risk to reward trades, to be able to catch insane entry on a lower time frame. And I'm gonna learn you exactly how to do that step by step. And before I actually learn you how to get such a sniper entries, I need to learn you basically how the whole market is functioning. So these are going to be 3 simple stages of the market that I'm going to go through with you, so you can understand fully how the market is functioning in the live market. And before I start, if all of this is too complicated to you, you can check out my one-on-one program that I just released. Alright, so let's start with the stage number 1. And basically what a stage number 1 is, it is a huge amount of buyers or sellers are pushing market to the one side. And what does that exactly mean? That is basically when the market is just creating movement to the one side. So in this example right here, I marked it with a purple rectangle, how you call it. Basically what we can see inside it is that the market is just over dominating with the buyers. Like, market is just pushing to the upside, and that is indicating to us that we are just going to the upside and we are not going to the downside, or we are not consolidating in the same place. You can clearly see that the market is pushing to the upside. So what is that instantly telling us? We want to see some kind of movements to the upside, and basically we know that the market is bullish, so we can go to the stage number 2. And the stage number 2 is basically market creating a pullback and balancing the market. So there is something specific about the markets, all markets in general, crypto, indices, forex, whatever you want. Every single one of them needs to rebalance sometimes. And if we are creating, let's say, push to the upside like this, a strong nice push, market needs to have some kind of correction phase, or a stage 2 as we call it, and that is called correction stage. And basically what the market does is, after creating a big push to, let's say, the upside, it needs to create a small kind of correction towards the downside, so it can rebalance buyers and sellers, because market cannot just forever pump to the upside, because who is going to be on the other side of the market to, let's say, sell to all the buyers? Because market needs to always have some kind of rebalance so it can continue with the movement. And now something weird happened. We are again at the stage number 1, and I'm gonna explain you this in detail. So the second structure is going to be made, because that will indicate to us that the dominating side of the market is this side. Basically, if we had a push right here to the upside, then we had a correction leg exactly like this one, how can we be so sure that we are still going to go to the upside? Because we are going to have one more structure to the upside that is clearly going to indicate us that the market is actually making pushes to the upside, corrections, and pushes to the upside. And basically in the next step I'm going to tell you exactly how we are going to capitalize on that. And we just make these steps just makes us sure that the buyers in these examples are in control. So what are we gonna do? We are of course just going to wait for the stage number 3. So after we made sure that we are going to the upside, making corrections, and again going to the upside, we can easily progress to the next stage. So listen carefully what happens in the stage number 3. So since it is so clear that market is trending towards the upside, because we see this push, then a correction, then another push, it is clear to everybody who is trading that market is trending to the upside. Basically, market needs to do something that is called a manipulation stage. So market cannot just, of course, do this forever, because everybody is going to know basically what market is doing, and everybody is just going to enter buy. So what the market is going to do, it is going to basically manipulate a lot of people out of the market. Because let me take you through this example right here. There is something called liquidity in the market. You probably heard of it, but I'm gonna explain you in details right now. If the market is going to the upside like this, so we created a push, after that we created a correction, and a lot of people can spot that this move was way stronger and way bigger than this little correction. And instantly after we start getting a new push towards the upside, a lot of people enter buy orders, let's say right here and right here. So a lot of people entered buy positions right here like this. And where do they put their stop losses? They put their stop losses below the low right here on this black line. So this is basically people's stop losses. And why do they put their stop losses there? because they need to have some kind of stop order to take a loss in the market. So if they buy the market right here, they are going to put the stop loss below the last little swing point, the last little low. And basically, how is they going to help us? Since the market is trending towards the upside, and that is pretty clear, we are not going to enter the market yet, but we are going to wait for the manipulation stage that is going to push really aggressively the market towards the downside. It is going to take this low that has all the stop losses like this, and that is exactly when we are going to start looking for the entry, because everybody lost money in the markets. In this stage, everybody is going to get manipulated, and a lot of the people are going to start thinking that the market is actually going to the downside, and they are going to expect, I'm going to tell you this in the next example, but they are going to expect some kind of pullback, and then like this, a pullback, and then a continuation of this new started trend. But that is not going to happen, because I'm gonna tell you exactly how we are going to enter after a manipulation leg on a lower time frame. So after all stages are done, all these 3 stages, which are actually kind of 4 steps, but there are 3 stages. So what are we going to do? We are going to scale down the 1 minute, 2 minute or 3 minute time frame. I'm going to tell you exactly how we are going to do this, and we are going to look for a specific entry that will never get missed, and we are rarely going to get stopped out, because you're gonna see right now how I do it, how literally genius this entry model is. So on the actual chart examples, I'm gonna learn you how you can choose between 1, 2 or 3 minute time frame, but now let me show you the universal thing that you're going to look on every single time frame. So the first thing, after the sweep happens, you are going to start looking for the imbalance. And basically what the imbalance is, so you can see we have total of 3 candles right here. So we have first, second and third down here. And what we are going to do, after the first candle closes, we need to see some kind of a little push to the one side. In this example, it is towards the downside. And what we need to see, when the first candle forms like this, second candle pushes, and the third candle closes. So the colors of the candles are not important. This can be a blue one, the green one, it does not matter. What matters is that we have this kind of space right here in the middle. So you can see that from this wick right here towards the third candle's wick, there is a open space, there is a imbalance, a little hole in the market that is likely to get retested, and basically it is likely to kind of get retested so we can continue moving the market. But what we are going to wait for is genius. So since we know that what happened in the last few steps, that we basically made structure to the upside, correction leg, structure to the upside, and then made a manipulation leg, and we are right now in this picture right here, in this little we scale down right here to the 1, 2 and 3 minute time frame, and we found this fair value gap. So this fair value gap is something that will basically make the market most likely go to the downside. But we are going to wait for something genius, and that is wait for the close above the imbalance to confirm the entry. And basically, what do I mean by that? We are going to wait for exactly this. So we need to see a disrespect of this fair value gap. So a close, actual close of the candle right above this fair value gap, and that is exactly when we execute a trade. Because why do we enter on the close above the fair value gap? Because fair value gap is something that is likely to get respected and continue the trend of the market. But since we disrespected it after a manipulation right here, we just entered the trade exactly like this, and you can just see beautifully. A lot of the times you're gonna see on the actual examples, market is literally going to skyrocket towards the upside. So we are just going to enter right here, put a stop loss below. I'm gonna show you exactly how to do that on the live examples, and basically wait for the market to do its thing. And this is the difference between you taking this on a higher time frame and this taking you on a lower time frame. You can literally get maybe not this insane of a result, but trust me, you are going to get way much more risk to reward ratios with the way of scaling down to the 1, 2 and 3 minute time frame and taking this brutal entry model. So just before we hop on the real chart, if you would like to skip all the hard work and guessing, I just started my own one-on-one mentorship program, so check it out. And also, if you learned something new throughout this video, make sure to tell me by subscribing and leaving a like. And also, nothing in this video is financial advice, you should do your own research. Okay, so we are at the live example, and I'm gonna use gold for the live example. This literally works on indices, forex pairs, whatever you want, crypto pairs, it works on everything, but I'm gonna show you examples on the gold. So what do? We start with spotting the stage number 1, and you can clearly see that right here we have a nice big push towards the upside, and this is basically a stage number 1 because we can see that the dominating side of the market is buyers. And what do after that? We look for the stage number 2, and you can clearly see right here the stage number 2, which is basically a correction. So you can pretty clearly see after the stage number 1, which was a push to the upside, we had a nice little correction to the downside like this. And so what do we expect right now from the market? We expect another push to the upside. So let's wait and see, does that happen? And as you can see, we got a beautiful push right here. Oh, we got a spike to the downside, so we got a beautiful push. So we had a stage number 1 right here, the first step. Then we got a stage number 2 right here, which is a correction leg. And then we had another stage number 1, which is another push towards the upside. So what do we do right now? We wait for the manipulation leg that should look something like this. So we basically mark out the low of the correction phase, and we just wait for it on the lower time frame. So let's see, is it going to push towards the downside? We already saw it, so it is pushing towards the downside, and we just can go on the 1 minute time frame, and we are going to wait for that actually to sweep. And also, before I continue, at the end of the video I'm gonna be giving out this complete playbook of my strategy for completely free, literally for completely free. So stick till the end of the video, I'm gonna tell you exactly how to claim it. So let's see what happens at the 1 minute chart. So we still did not sweep this low, so we are waiting for the sweep. So we are just waiting, and here we just had the sweep. So the next step, and this is the step where I'm gonna show you how you can use either 1, 2 or 3 minute time frame. So you can see right here that we have one fair value gap right here. I learned you how to mark it. You can see that basically here's a hole and imbalance in the market. But what is interesting on this 1 minute time frame is that we actually have 2 fair value gaps in a row. And what is that going to tell us? That is going to tell us that we need to scale to a higher time frame. So we are going to go from a 1 minute time frame to the 2 minute time frame. And let's see the difference between these two time frames. As you can see, these 2 fair value gaps that we have on the 1 minute time frame are actually 1 fair value gap on the 2 minute time frame. So what are we going to do? We are going to use this time frame as our entry. So all we need to wait for right now is basically the close above this fair value gap. So let's see, does that actually happen? It barely happened, it just didn't happen. So we are just going to wait a little bit more, and let's see, is the market going to respect it or close above? And there is the close above. So right now what are we going to do? There is 3 examples of us putting the stop loss in the market. First examples is basically the worst example, but the safest example. So it is putting the stop loss all the way below this low, and trust me, nobody wants to do that because risk to reward is going to be really bad. Another example is putting it below the fair value gap exactly like this. And then we have one more example, which is putting it below the candle that closed above. So all 3 are valid. Of course, if you go tighter with the stop loss, it is more likely to stop you out. So in this example, we can either go like this or like this, but for this purpose of the video, I'm just gonna go for it like this. And what we can do is we can target this high of the second, basically stage 1, how you can call it. And let's just see how does this play out. We can even execute it like this, and we can put the stop loss below like this. We are actually risking $2, so let's just see like this TP on this high right here, and let's just see how will this trade play out. Will it lose or will it win? So it looks like it is skyrocketing, and yeah, there it is. So this trade, literally, let's see how long does this trade take. It actually took about 38 minutes. So in 38 minutes you would have gained 3 risk to reward, which means I'm just gonna give you an example. If you get a funded with $100,000, which is literally guaranteed in my mentorship program, if you risk 1%, which is $1,000, in 38 minutes you would have gained $3,000, which is pretty insane if you ask me. So let's just continue with another example. Alright, here is the another example on the chart right here. So I'm gonna clear all of this on the chart for you right now. So as you can see, if we start, we can instantly see stage number 1 right here, and this hole in the market is not that important to us. It is basically a new week opening up, but that is not important. So we can see that market pushed to the upside. Basically that is the stage number 1. Then we have this stage number 2, which is us making a nice little correction in the market like this, and basically we are looking for the step number 3 or stage number 1 again, and let's see, does it happen right here? And actually it did. So you can see that clearly we pushed to the upside right here, and we can just wait for another stage, and stage number 3, which is called manipulation stage. You already heard for it. So it is going to look something like this, and it is probably going to, it has to sweep this low for us to actually execute a trade. So let's see if the market is going to push to the downside. And when it does come close to this low right here, we are just going to enter the 1 minute time frame, and it is coming close, so we are just going to go to the 1 minute time frame. Okay, so at a 1 minute time frame, we are just going to basically wait for this low to get swept. So let's just wait. So before we sweep this low, we cannot do anything, because it is pretty important for us to actually manipulate buyers and sellers out of the market. So as you can see right now, we swept it, and we have again the same example as the first one. We have 2 fair value gaps in a row. So what do we do? What did I learn you? Basically we need to go to the higher time frame, which is going to be in this example 2 minute. And if the same example happens in the 2 minute, if we have a fair value gap, then a fair value gap, you're just going to go to the 3 minute time frame, and that's it. So at the 2 minute time frame, we have this pretty nice fair value gap that is singular, so that is important for us. So what do? We just wait for this fair value gap to get inversed, and basically let's just wait and see will that happen. So we are waiting, we wicked it. Let's see, is it going to happen right now? Still not. So we are just patiently waiting, not entering the market. Let's see. And it is actually all the way at the edge. So if we zoom out all the way, you can see that it just closed above, barely, but still closed above. So it is pretty valid for us. So what do we do right now? We enter the market right here. How do we place the stop loss in this example? So I'm gonna tell you all again. Basically we have 3 options. We either put it at the low, which is the most safest but the less risk to reward. We put it at this example on the fair value gaps bottom, which is the most tight example of them all, or we put it on the candles low. So I always like to go for the middle option, which is like, I would say, the most neutral between risk and win rate, and basically like it is the best option out of all of them. So I don't like to go all the way tight like this, because it can stop you out sometimes, and I don't like to go all the way wide like this, because then stop loss is just abnormally big and we are not going to have nice basically risk to reward. So let's scale out and basically look at this huge target towards the upside. So this is literally something you are not going to target that often in the live markets, but we are just going to see how does it play out for the sake of the video. So let's scale it out like this. I'm going to put the stop loss right here, take profit right here, and let's just wait and see. So stop loss, wait, it's not going to stop me out. Nice. So stop loss right here, and you can see actually if we placed a stop loss below this low like this, it would have, below the fair value gap, it would have actually stopped me out. And that is why I always tell you, I always like to go for the middle option, which is this one right here. And I don't want to go for this option, because if this one is going to get taken out, this candle slow, or the middle option, this one is also going to give out. So let's just wait and see, is this going to play out towards the full take profit? It looks like it is. Okay, a little pullback we have, and there it is. Actually it ended up playing this huge risk to reward. So we got 8.2 risk to reward, which would have been $8,200. And now, since you made it all the way to this part of the video, if you want, you can go down there to the description and you can claim this playbook for completely free. Trust me, this is all you need to trade actually profitably in the live markets. And also, if you would like to get mentored by me one-on-one personally, you can also check out some links down there in the description. If you like the video, you can throw a subscribe, you can throw a like, you can comment something nice. Also, if you have any questions, just ask them down in the comments. And basically, with all of them being said, I'm just gonna see you in the next video. Peace.